Hey guys, this is Prashant Rao, founder of RetailTrader.ai. This week has been a pretty big week. We launched Curated Trades, pro feature, and thanks to all those members who signed up during the last minute to get the beta plan. I hope it's well worth it because the pro plan costs a lot more. So having said that, there was one major decision that I had to make along the way with respect to the pro plan and curated trades in general. And that was what kind of risk profile do we need to take, right? There are always ways to generate a lot more money, but it comes at a cost. So there were two major risk profiles that we landed on. One was what I call the Ferrari, which was generating about 95% annualized returns. And there's the tank, which was generating approximately 40% annualized returns. The Ferrari obviously takes a lot more risk. It drives fast, it swings, and that sort of is more like how I personally like to trade. But that's not what everybody else wants to do. Right? Not everyone can withstand 10% drawdown or 15% drawdown. If things get severe. When you're working and you're not running a business, you're getting paid on a periodic basis. That's what most people are used to, and that's the mental model that they have. Whereas in a business, if you've ever run a business, you know that there are ups and downs, and that's just the nature of the way business run. The audience that we're talking about here is more of retail traders who are not really used to the kind of volatility that you might see in a business. The choice behind the tank was sort of deliberate in that sense. It's tailored more towards the working professionals, and they're not there to gamble. They're there to make systematic returns. So that was the major choice that I had to make along the way as we sort of decided what to do with the pro plan. Then, on the markets front, the big tech and small tech, all of that has been getting beaten thoroughly in the markets, and it looks like we may have found a bottom. We'll have to see next week. It's either going to be a swing up with a relief rally, or we're going to get another round of major beating. So I'm currently positioned long these tech stocks, and I'm ready to get out if things go bad. So that's how I'm sort of looking at this right now. I also made a pretty significant mistake last week. I normally never look at the news and decide what to trade, and I broke that cardinal rule, right? I don't know when, but somewhere in the middle of the week, I got up at 5 a.m. and there was this news about U.S. government investing $1 billion or something in this U.S. Rare earth company, and I saw that news and it looked like things were cooling off, and I was about to see a bounce. So I went in and bought that stock, and it dropped immediately, and I lost about 8% on that trade. But you can see how devastating a wrong trade could be, right? And an 8% an account size that I'm talking about is pretty huge. The good thing is that it's currently up 40+%, so an 8% is not going to do much damage. But what I'm trying to highlight is the importance of being systematic and disciplined, and even the best traders and even the most experienced traders out there make mistakes. So if you're banking on an algorithm or a model that generates 20% returns, mistakes are bound to happen, and you're never going to beat the market. And that's the precise reason why most people never beat the markets, because mistakes do happen. And you have to compensate for it by being much more aggressive and being much more methodical in terms of what you pick. Right, so that's just how you get better returns. And so yes, I just want to share that story because we often talk about all the wonderful, the chart that's going up and up, making 100% on the year, but beneath that there is a tremendous amount of volatility and a tremendous amount of fluctuation that's happening, which people don't see. And I just wanted to talk about that little story that happened this week to me personally, just to reinforce that fact. So that's pretty much all I had for this week. So we are going to launch some advanced insights and charting capabilities, which we're going to see in the coming weeks for the Pro plan. We're just getting started here. When you think about it, it's only been 2 months since we launched the basic plan, and we're already profitable as a company. So we are already profitable as a company, and that just goes to show how powerful AI can be used properly. Right? Most founders and companies that are being built out are sitting at $0 with a lot of investment being put in by venture capitalists. And here we are, I'm sitting here at home, and we've built out a profitable company leveraging all the AI capabilities. And I think that's what we are about to see in the future. It's going to be an explosion of niche companies that are out there and competing with some of the biggest companies that are in the cutting edge spaces, right? So AI, if you think about it, is just leveling the information and expertise available for everybody out there. It's just making it just so much more uniform. So all it boils down to now is how creatively are you going to think and what can you do differently. So those are my thoughts, and it's been great this week. So despite the little bit of nastiness around USAR, hopefully it will recover. But I wish you all a very happy weekend, and I will see you guys next time.